Greetings everyone, I'm James. It's 6 a.m. Eastern Time, April 17th. Last night, April 16th, US stocks staged an extremely thrilling high-altitude balancing act above the S&P 500 peak. And although the index reached a new high, the market's volatility was still unprecedented. Now let's look at the latest precise closing data. S&P 500 closed at 7,041.21 points, up 0.26%. Again, the S&P closed at 7,041.28 points, up 0.26%. And let's go here to the NASDAQ. The NASDAQ closed at 24,102.7 points, up 0.36%. Actually, it looks like the NASDAQ actually closed at 26,333. So the NASDAQ closed at 26,333, up 0.49%. And the Dow Jones closed at 48,578 points, up 0.24%. And if you only look at the indices and think everything is calm, you're wrong. Last night's market was actually quite turbulent. TSMC's explosive earnings report bolstered the chip stock sector, while Netflix, let's go here to Netflix, while Netflix withstood pressure after its earnings release, avoiding the flash crash feared by the market. Now, the bulls built a solid defense above 7,000, but is this defense truly unbreakable? Now, let's begin with some in-depth breakdown. Okay. Let's talk about the macroeconomic truth, the heavy hammer of interest rates behind the strong data. So last night's initial jobs claim unexpectedly fell to 207,000, and the Philadelphia Fed manufacturing index hit a staggering 26.7, far exceeding the expected 10. So, some of my thoughts: the market was initially awaiting retail data, but these two exceptionally strong economic data points directly reminded the bulls that the US economy is not only not in a recession, but it is somewhat overheated. So on one hand, this confirms that the US economy is not in a recession, providing fundamental support for consumer stocks like Netflix and Disney. On the other hand, it completely shatters any illusions regarding a Fed interest rate cut in June. Now, seeing that the yield on the 10-year US Treasury note rebounded instantly last night, climbing to 4.32%, this explains why the indices are struggling to advance further. At an altitude of 7,000 points, the positive fundamentals are locked in a fierce battle against tight liquidity. So, one of my questions to you is the current US economy overheating or just right? Type 1 if you believe interest rates need to be raised further to cool things down, or type 2 if you believe interest rates should be cut as soon as possible. Let's talk about the earnings duo, TSMC to the rescue and Netflix holds the line, okay? Here are some key data points. TSM's Q1 net profit surged 58.3% with the contribution from its AI business skyrocketing. And Netflix, although the stock experienced some after-hours volatility following news of a founder stepping down, its share price held firm after the earnings release, avoiding any sudden collapse. Now, some of my thoughts. Do you remember ASML, which I mentioned yesterday? While ASML reported a flood of orders, TSMC used its earnings results yesterday to prove that money is truly rolling in. This directly solidified the valuation logic for NVIDIA. AI is not merely a speculative bubble, but a source of nuclear-level power. Meanwhile, Netflix's resilience demonstrates that even in a high-interest rate environment, the streaming giant's dominance remains unshakable. The combined rescue effort by these two heavyweight stocks was the fundamental reason the NASDAQ was able to hit a new high last night. Again, there's the new high last night. So my question to you is, which do you have more confidence in? Hardcore computing power, chips, or soft power consumption, streaming? Give me a 1 for computing power or 2 for consumption. Now, let's look at the overlooked risk, the stealth attack. from regional banks, hot topic interpretation. Now let's look at the overlooked risk, the stealth attack from regional banks. Although the broader market remained stable last night, the regional banks ETF KRE, let's look at that, KRE. Yeah, KRE quietly slipped by 1.8%. So, some of my thoughts, this represents the darkest corner of last night's market narrative. As US Treasury yields climbed back up above the 4.3% mark, the market began to grow concerned about the risk of debt defaults within the commercial real estate sector and among small to mid-sized banks. If you focus solely on the S&P 500 hovering around the 7,000 mark, you might be missing the fact that capital is quietly withdrawing from the financial sector. This represents a classic case of seeking the virtual while shunning the real capital. This represents a real classic case of seeking the virtual while shunning the real. Now, capital is taking refuge in AI while fleeing from traditional credit markets. So, one of my questions to you is, do you view current bank stocks as a golden opportunity, a good buying opportunity, or a minefield, a zone to avoid? Type 1 if you think it's worth getting into, or type 2 if you think you should steer clear of it. Now let's go on to NVIDIA right here. Yeah, NVIDIA, the battle for $200. NVIDIA closed last night at $198.35, recording a daily change of 0.26%, a slight pullback. So, some of my thoughts on this tonight, Friday night, marks an extremely critical options expiration day. According to Gamma Distribution, billions worth of positions are currently battling it out at the $200 level. Even the strong positive news from TSMC last night failed to push NVIDIA past the $200 mark, indicating that selling pressure at this level is exceptionally firm. The first hour of trading after tonight's market open will determine whether NVIDIA breaks out and takes flight or pulls back to retest the $190 support level. So, my question to you is, can NVIDIA break through the $200 psychological barrier tonight? A truly historic moment? Give me 1 if you think it can. Give me 2 if you think it cannot. Geopolitical dynamics. The second half of peace expectations. West Texas Intermediate crude right now sits at 93.48. Brent crude sits at 98.28. And US oil sits at 89.74. Key signal, oil prices have continued to stay below the $100 round number psychological barrier. So some of my thoughts on this, the decline in oil prices stems from the market pricing in the possibility that the president may bring the conflict to an early conclusion. This reduces inflationary costs for businesses and serves as a positive catalyst for tech stocks. However, this logical extremely fragile should peace negotiations hit any snags. Oil prices could stage a sharp retaliatory rebound. At that point, the S&P 500, currently sitting at 7,041 points, would face a massive cost shock. So, do not mistake the drop in oil prices for a sign of recession. Rather, it represents a politically driven return to normalized pricing. However, once crude oil falls below $100, do not mistake the drop in oil prices for a sign of recession. Rather, it represents a politically driven return to normalized pricing. Now that crude has consistently fallen below $100, I recommend beginning to scale back on energy sector short positions to guard against a violent rebound should peace expectations fail to materialize. Now, let's look at the macro overview. Some indicators to watch at today's open. Ahead of today's market open, everyone must keep a laser focus on these 3 data points. The VIX Volatility Index, currently trading at 18.24. If it drops below 15, it signals that the market has entered a phase of irrational exuberance, at which point we should begin reducing our position sizes. US 10-year, US 10Y, 10-year US Treasury yield. The 10-year, now let's talk about the 10-year US Treasury yield. It surged significantly last night and is currently oscillating wildly within the 4.305%. Yeah, it's right now it's at 4.305%. If it continues to push toward 4.4%, tech stocks, no matter how strong their earnings, will face severe valuation compression. Now let's talk about Netflix's performance. In the first hour of trading, if Netflix can successfully hold onto yesterday's gains, it will firmly solidify market confidence in the resilience of consumer spending. Now, I've noticed many people in the comments asking about specific questions about their current situations or holdings. Please do not act impulsively. The current market environment is a period of hedging, a tug of war between earnings-driven bull market and a liquidity-driven bear market. So, stock-specific divergence will be extremely pronounced. Some stocks, despite having excellent earnings, may fail to rally if they do not appear on institutional investors' buy list. So, send a direct message to my assistant with the details of your current positions. I will then share with you an exclusive strategy report that I have compiled internally to help you navigate the potential market turbulence expected tonight. So that concludes today's in-depth pre-market strategy briefing. Again, my assistant's contact details are there. So that concludes my in-depth pre-market strategy briefing. Again, contact my assistant and claim your strategy report. You will see the contact details at the bottom of your screen and enter the access code APR17PRE. Number 2, tune into our live stream today at 10 a.m. We'll be watching in real time to witness the final outcome of the S&P 7,000 point defense battle. And number 3, when facing a new all-time high, the greatest danger isn't that the index might fall, it's that overconfidence causes you to lose your instinct for cutting losses. See you in the live stream.